Hey, crypto enthusiasts! Welcome to our channel where we decode the complexities of cryptocurrency for you. Today, we're navigating the labyrinth of cryptocurrency taxes for 2024, from preparation to filing, and all the latest software and insider tips. Let's get started. In 2024, the crypto tax landscape has evolved, making compliance more crucial than ever. The world of cryptocurrency is diverse and dynamic, encompassing numerous activities like trading, staking, mining, and earning, each with its unique tax implications. From capital gains on your trades to income from staking rewards, every crypto transaction you make could potentially impact your tax bill. It's essential to understand these obligations to avoid running afoul of the law. But fear not, this complex terrain can be navigated smoothly with the right knowledge and tools, and that's precisely what we are here for. Today, we'll guide you through navigating these waters smoothly. Preparation is half the battle. Start by gathering all your transaction records, including trades, sales, and any crypto income. When it comes to cryptocurrency taxes, being organized can save you a lot of headaches down the road. Your transaction records should include every single activity you've conducted in the world of crypto. Whether you've been buying, selling, trading, mining, or earning crypto through staking or airdrops, each of these transactions have potential tax implications. Now, what exactly should you gather? You'll need the dates of your transactions, the amounts, and the US dollar value at the time of each transaction. Remember, precision matters. Having detailed records can make the difference between a stress-free tax filing and a tangled mess. Accurate records can also protect you in case of an audit. So, take the time to get organized. This will be crucial for accurate reporting. In 2024, the IRS has introduced Form 8949 and the revised Schedule D for crypto transactions, making accurate reporting more straightforward than before. For those unfamiliar, Form 8949 is the document where you'll detail each and every crypto transaction you've made throughout the year. This includes the date of the transaction, the amount, and the cost basis, essentially the original value of the asset when it was acquired. Once you've filled out Form 8949, you'll move on to Schedule D. This form is a summary of your total capital gains and losses from all sources, not just cryptocurrency. It's where you'll compile the data from Form 8949 and other relevant forms. Remember, while these forms may seem daunting at first, they're crucial for maintaining compliance with the IRS. And the more accurate your reporting, the less likely you are to run into issues down the line. These forms are your ticket to compliance. With the right software, managing your crypto taxes can be a breeze. As the digital currency landscape continues to evolve, so do the tools designed to help you stay on top of your tax obligations. This year, several platforms have emerged as game changers. Leading the pack are CoinTracker, TaxBit, and ZenLedger. Each of these platforms offers a unique set of features tailored to meet your crypto tax needs. CoinTracker, for instance, is known for its comprehensive transaction tracking and portfolio management, while TaxBit shines with its user-friendly interface and robust reporting features. ZenLedger, on the other hand, boasts of its wide range of supported cryptocurrencies and exchanges. But what truly sets these tools apart is their ability to simplify the complex. They can automatically import transactions from your exchanges and wallets, accurately calculate your capital gains and losses, and even generate pre-filled tax forms. These tools can automatically import transactions from exchanges and wallets, calculate gains and losses, and even generate pre-filled tax forms. Now, for some insider tips. Navigating the crypto tax landscape can feel like a maze, but with the right strategies, you can turn it into a game of strategy. One such tactic is using specific identification methods like HIFO, or highest and first out. This method involves selling your highest cost coins first, which can help reduce your taxable income and potentially lower your tax bracket. But remember, HIFO isn't a one-size-fits-all solution. Every crypto enthusiast's situation is unique, so it's essential to consider your personal circumstances and financial goals before choosing a method. Another savvy move is tax loss harvesting, a strategy that involves selling off your crypto assets that have experienced a loss. By doing so, you can offset the gains you've made from other trades, potentially reducing your overall tax liability. It's like turning your lemons into lemonade. But as with all things crypto, the tax landscape is constantly changing. That's why staying up to date with the latest tax laws and regulations is crucial for maximizing your benefits. From new IRS guidelines to evolving tax software, being in the know can make all the difference when it comes to your bottom line. And remember, staying up to date with the latest tax laws is crucial for maximizing your benefits. Avoid common pitfalls by ensuring all your crypto activities are reported, including transactions on foreign exchanges and DeFi platforms. It's a common misconception that if your crypto stays in the digital world, it doesn't need to be reported. This is not the case. Whether you're trading, earning interest, or receiving crypto as a gift, it's all taxable. And remember, tax laws apply globally, not just in your home country. Another frequent error is not keeping precise records. It's not enough to have a rough idea of your transactions. You need to know the exact date, amount, and value in US dollars at the time of each transaction. Lastly, don't forget about the tax implications of DeFi platforms and NFT transactions. With the rise in popularity of these technologies, it's crucial to understand their tax implications as well. Accuracy is your best defense. Considering the complexity of crypto taxes, don't hesitate to seek professional help. Navigating the intricate world of cryptocurrency taxes can feel overwhelming, and it's perfectly okay to reach out to the experts. Tax regulations change frequently, and keeping up with these changes can be a challenge. Crypto-savvy tax professionals are equipped with the necessary knowledge and tools to ensure your tax filing is thorough and compliant. They can help demystify tax laws, identify tax-saving opportunities, and help you avoid costly mistakes. So, when should you seek professional help? If you've had numerous transactions, experienced significant gains or losses, or if you're simply unsure about your tax obligations, it may be time to consult a professional. A tax advisor specialized in cryptocurrency can offer personalized advice and peace of mind.